Now we turn our attention over to the January STAX report. What's that? Schwab Trading Activity Index. Joe Mazzola is with us, Trader Education, Charles Schwab. Thank you so much for being with us. So what did we learn from the latest STAX report?
Yeah, well, hey, clients were buyers. They were buyers in January, but they were selective buyers, Nicole. I think that's the takeaway is that, they used, I think they used interest rate moves. They used stronger economic data to make some pivots. So they pivoted away from some of the interest rate sensitive names that they had purchased in December, moved a little bit more into the Mag 7. Some of the big net buys that we saw were in Nvidia, Amazon, Microsoft, AMD, even Tesla was a stock that was bought across the board. But like I said, I think a lot of that had to do with expectations heading into earnings, and then really kind of drilling down into companies that when you think of maybe 2023, companies that did well in a rising rate environment.
How does this rate, when you look at the historical perspective, the exposure is still relatively low? Is that right, Joe?
No, that's absolutely right. And, it might be a little surprising to think that, at the beginning of the year, coming off the strong November, December that we saw, that we didn't see a little bit more bullish client positioning. But like I said, I think it was selective buying. You look at the number, it was 44.73. So, we look at a STAX, which is a traditional range between, say, 35 to 75 on the upper end. So it is moderately low. And, I look at that as a client that, that potentially still has cash available. It doesn't necessarily mean that that they weren't buying. It's just that maybe they weren't buying as much, right? So they weren't levering up. They were kind of sticking to cash transactions. So, basically, Nicole, the way this works is we have 35 million accounts that we can look at. We take a sample size of that, and we look at trading activity. And what I like about this is that it's behavior based, right? It's not attitudinal based. So we're actually looking at what they're doing to gauge that sentiment.
Right, understood. And at this point now, they also sold off some names. So when they're selling, it doesn't mean they've dumped out entirely. It could be that they're just taking some profits or trimming a position, right? And you have some names for us there.
Absolutely. Yeah. So Bank of America, Walmart, GM, Carnival Cruise Lines, and then Warner Brothers Discovery. Those were the 5 largest sales from client accounts. And, once again, I think when you look at these names, these are names that tend to be a little bit more interest rate sensitive. Maybe not Walmart as much, but a little bit more economic sensitive. And so those were the ones that clients kind of peeled off a little bit in the portfolios and rotated into some of the mega cap names that we had mentioned before. I think another takeaway from that is I just kind of look at the economic backdrop, right? And I think to me, it really goes back to the interest rates. Interest rates, rallied from basically 3.8 in December to about 4.15%, kind of topping off it during that period. When we look at the STAX from, January into January 24th, and that was kind of the end. So to me, that between that and the dollar strengthening, I think that was one of the reasons that clients pivoted.
When you mentioned some of the Magnificent Seven, you said they were going into names like Nvidia. What were some of the others that seemed popular of late?
Yeah. So we had Microsoft, AMD, Tesla, and then you mentioned Nvidia, yes, and then Amazon. Excuse me. So those would have been the 5 biggest buys that we saw from clients. And like I said, I think out of those, they did a pretty good job nailing a few of them. Tesla pulled back a little bit, but as your previous guest said, you can't group all the magnificent together anymore. You kind of have to look at those on a separate basis.
Yeah. And look, this is proprietary data to Schwab because they see the investor movement, used to formerly be known as the Investor Movement Index. And so it really gives them a glimpse into the behavior and patterns of some of the traders, investors, whether they're day traders or long-term. Any other final takeaways from this or just the week ahead?
Yeah. So, Nicole, what I would say is this. We get this question quite a bit. How do you use this, right? I think this needs to be used in conjunction with the other type of analysis that you do, whether that's fundamental analysis to kind of identify sectors and opportunities within industry groups and stocks, technical analysis to look for, entry and exit signals. Then you can also incorporate this. This is kind of behavior analysis from clients and behavior analysis from the retail public. And to me, that kind of strengthens, whether that's a bias towards a bullish or bearish, just using all three of these components together.
Yeah, and luckily we'll get it again in February. Not too far away.
We will.
Thank you so much, Joe Mazzola. Great to see you of Charles Schwab. Thank you for that.